Stock markets on Wall Street and across the world plunging today, opening in the red after a rough finish last week on a weaker than expected jobs report.
It was a rough day, no doubt. The Dow plunging more than 1,000 points as some of the world's biggest tech stocks tumbled today. The Nasdaq, the S&P also dropping sharply today. All of this fueling fresh fears the U.S. could fall into a recession. ABC's Melissa Adan explains.
Right from the opening bell, stocks plunging, the Dow down 1,000 at the start. The S&P 500 also falling sharply, and signs of a slowing U.S. economy is sending a signal across the globe. The sell-off starting in Asia. Japan's Nikkei plunged 12%, its worst day since the Black Monday crash in 1987. Investors reacting to Friday's stock declines here, and the news, the U.S. employment rate hit 4.3%.
That is historically low joblessness, but it does show that joblessness has increased more than 0.5% since January, when unemployment was 3.7%, something that doesn't usually happen when the economy is healthy. A rise like that is historically a sign that a recession is imminent.
Many tech stocks leading the downturn today, mainly companies relying on artificial intelligence trade like Alphabet, Amazon, Meta, Microsoft, and Tesla.
A lot of these companies, the Magnificent Seven and companies beyond that, they're spending a lot of money on artificial intelligence, but the payoff is a little bit further down the road. So I think there's a broad array of companies that are eventually going to make money in artificial intelligence, but for right now, it's very narrow.
Economic experts say all this signals an interest rate cut coming from the Federal Reserve to fend off a recession.
So it's good news if you are carrying a large amount of credit card debt. And in fact, people are taking on more credit card debt. The average household has more than $7,000. If you go back to 2021, when the APR on average was 15%, that would cost you $90 in interest. Today, at today's rates, it's $126.
A cut in interest rates would also help those looking to get a mortgage or car loan. The Fed is set to meet again next month. Melissa Adan, ABC News, Los Angeles.